What's up, everybody? This is Greg Helbeck. Welcome to this week's Real Estate Investing Weekly Lesson. And today I'm going to talk about red flags with HOAs when you're buying condos. So if you're not familiar with me, I've been a full-time real estate investor now for 10 years. I've done well over 340 properties. So I got a lot of experience in houses, condos, small multifamily. So if you get value from this video or any other video I put out there, do me a favor, subscribe to the YouTube channel, like the video. And if you're listening on audio, do me a favor, share this with someone else. It would really mean a lot to me. And today I'm going to talk about if you're buying condos, which if you're going to be doing a lot of marketing, you're going to get these kind of leads. You need to understand what's going on with HOAs because sometimes they can be a big issue. So first things first, if you are not familiar with what an HOA is, basically it is just the homeowners association. So if you live in a condo complex, the way that it works is that, let's say there's 50 units in the complex, and instead of having one owner own the entire building, which would be an apartment building, condos is when you individually own the units yourself. So the HOA is basically the homeowners association that manages the building, right? So HOAs, deal with removing snow in the winter. They deal with cutting the grass. They deal with maintenance issues outside the building, roof, siding, whatever the case is. So if you're living in a condo complex, there's a very high chance you're going to be paying an HOA fee every month, and that covers what I just mentioned. But there's also problems with HOAs. So number one, you have to understand if you're buying a condo, sometimes banks will not allow a mortgage on a condo if the HOA is all fucked up. So let's say you're getting a mortgage and the bank, they're always going to ask for the condo documents. They're going to ask for the financial documents. They're going to see how healthy the HOA is. Are they bleeding money? Are they making money? Do they have enough money to pay for their expenses? And then they're going to look for the master insurance policy, which is basically a giant umbrella policy that the HOA has in case there's, liability on the property. Like someone falls in the common area, HOA's got insurance, right? So they're going to look for those things. And as long as those things aren't crazy and there's no red flags with those, banks have no problem loaning on condos because they're good assets and they go up in value and a lot of them are really nice. So usually that's not a problem, but sometimes these HOAs are all financially screwed and there's a lot of just people not paying the HOA bills. And without sounding like an asshole, if a condo complex is filled with mostly tenants and not a lot of owners, what will happen sometimes is generally tenants don't treat the properties the same way the owners do. So the condo building will completely start to dwindle. Ask me how I know. So the banks are going to look at this. They're going to say, all right, well, I'm not going to give you the loan because this HOA doesn't financially seem strong. And now all of a sudden you thought you were buying this thing and the bank won't give you the money. So red flag number one is you need to make sure that the HOA is financially healthy and they have a valid master insurance policy. And if they don't, you're in trouble. So I'll give you a quick story and then I'll go to my next lesson. I almost bought a condo in South Seattle in Bryn Mawr. I think that's how you say the neighborhood. And it's a little bit of a spicy area, but definitely the numbers made sense. So I made the owner an offer and it was a really low offer. So he took the offer. We didn't sign it. I wanted to call the HOA. Something seemed off because every single person's porch in the complex was condemned. So I called the HOA up, I called the property manager up and they were like, yeah, this basically is about to go to receivership. So the HOA is practically failing. No bank will loan on it. And then there was no comparable sales because nothing was selling in there. And it all made sense. If I bought that property, I would have been screwed. I wouldn't have been able to refinance or sell it to someone getting a mortgage. So I dodged a bullet there. So that's red flag number one, HOA health. Number two here. Now this is where, it depends on your tolerance. So there's some HOAs. Some of them are chill, but some of them are just up your butt all day. So I have a few properties in a certain place, which will go unnamed. And I think every freaking day I get a robocall from the HOA saying some shit. There's all these rules, all these regulations. They'll fine the crap out of you. It's crazy. But thankfully, these properties are really good properties. I bought them at a really 58% of what they're worth. So I'm willing to put up with it because of the equity I have in these properties. If you're looking to break into the condo game, I would probably say avoid HOAs like that. And how do you find that out? Number one, you just ask the other people in the complex, hey, how's this HOA? Are they cool? Do they bother you? And, people will tell you. A lot of these condo people are really close because they're literally living right next to each other. So that's the second red flag. If the HOA is really kind of just nosy and up your butt, it's never really fun, especially if you're just getting into condos because it'll put a bad taste in your mouth. Third lesson is insane HOA fees and special assessments. So this is something where you could really get hurt in condos and you got to understand there's this thing called the special assessment, which basically means that let's say everyone pays $300 a month for their HOA, and there's a huge issue on the building and there's a roof that has to get replaced. Normally, this HOA due that you pay every month, like a piece of that goes to something called the Capital Contribution Fund, which is basically a bank account they have or some sort of money market account they have where they save a bunch of money up, and then when the roof needs to get replaced for the whole complex, they have the money, right? So good HOAs have the money and you're never paying more than your HOA dues because they have reserves to fix that stuff. But a bad HOA still needs to fix the roof, but if they don't have the money, they have to collect it from the owner. So they get to have a special assessment too, which means that basically you're obligated to pay thousands and thousands of dollars, right, on a one-off basis in order for the HOA to fix the roof. So let's say you're used to paying $300 a month and all of a sudden you get an email from the HOA, or usually they'll do this through the mail. They'll say, hey, there's a $3,000 per owner special assessment due in 2 months. We're fixing the roof. So basically, if you don't pay $3,000, you're going to be in debt with the HOA. You're going to have a lien on your unit, and it can be a nightmare. So you need to ask HOAs, like, hey, are there any special assessments coming? Do you guys have enough reserves to replace the roof if needed? So you got to really be, aware of the special assessment stuff. So those are the 3 red flags. Number 1, the financial stability and the master insurance policy of the building. Number 2 is, when they're really annoying and they're up your butt. That's never fun when you're a landlord. And then the third one is special assessments. And you got to ask them, are there any special assessments? And if there are special assessments coming due, you got to go in there with your eyes open and probably offer less to the owner because you have to account for that special assessment. So those are 3 lessons, 3 red flags to avoid with HOAs. I encourage you to buy condos, but you got to do your homework. Hopefully this video helps you. And if you get value from this, do me a favor, share it, subscribe to the YouTube channel. And if you're in the Hudson Valley or Seattle or Delaware, you got a house you want to sell me, I'm looking to buy more deals from wholesalers. So send me an email if you have a deal, Greg@velocityhousebuyers.com, or a DM on Instagram. I'll see you on the next video. Take care.